All right, guys, what's up? Alec back with another stock market investing video. And today, coming off that big dip that we had in the market that everyone was affected by, the Dow Jones falling 900 points in one day and about 1,900 points just in 4 days, we have a good day here. So this video is going to be about 5 to 10 stocks to be watching right now, and some swing trades, possible swing trades, and some long-term holds, and some good values in the market right now, and some stocks that are just right at the buying territory. They're bouncing off their support, and definitely 5 stocks that you should be having on your watch list right now during this whole crash. Now, before we get into those 5 individual stocks, I do want to touch on a few things about the stock market crash and some information that is going to be important for you guys to know as well. So starting yesterday, we have the Dow Jones down 900 points in one day, 943 when I took this screenshot. Biggest single day fall since April. Stocks fall sharply on rising Rona cases, and it's not like it just went away overnight. It's still happening. Let's get into some reasons why we saw some green today. So earnings from second quarter to the third quarter is going to be a positive thing for a lot of companies, and we're seeing a lot of big companies report earnings today, like Apple and Amazon. Pinterest up 31% after hours. And like I was saying before, we have a lot of people reporting earnings today, like Amazon, Apple, Facebook, Google, Twitter, Starbucks, UPS, Visa, Fastly, all reporting earnings today. And that's why you can even see some of these ones already going up, like Apple and Facebook, is because they're probably projected to do pretty well. So if they smash those earnings, you can even see them going up more. And that brings us today. We woke up and it was a pretty mixed market. Facebook was up about like 3% in the pre-market, Apple 2% in the pre-market, and then others were down. And at this point in time, Apple's up like 5 to 6% too. So one important thing to notice too is that the GDP and the unemployment were a lot better than expected as well. So in Q3 alone, the U.S. economic activity rose at a record of 33% annualized pace after the pandemic induced the slump. So from Q2 to Q3, they raised 31%, which is amazing for our economy and amazing news for our economy, saying that we did bounce back in a huge way. And this is my take on it. The economy reported positive GDP and positive unemployment growth. So it makes sense the numbers are green today because that's a huge thing for the economy. But the reality is still the Rona numbers are increasing as we speak every single day. And the election drama is still going on with no stimulus into 2021. It did get pushed. So keep in mind, we also just saw the Dow drop 900 points in a single day. So, I would be super cautious and stick to the plan of just buying small amounts evenly and spread out over the next 1 to 2 months. And if you see a red day, go ahead and buy a little bit more. And if we see a green day like today, you can hold off a little bit so you have more money to put in during the red days that we see in the coming. So that leads us into our first stock. It's going to be Slack, ticker symbol WORK. And I would love to be buying this one at about $25, $24 a share. I'm definitely going to be putting around $200 in at 25 and probably even more as it goes down too. So definitely have this one on your list and set a price alert for around $25, $24. And this is going to be more of a long-term hold rather than a swing trade, by the way, as well. All right, and the second stock we're going to be talking about is going to be Redfin. We've talked about this one a little bit on the channel, but now it actually looks like it is bouncing off the support. So you'll actually see right there, I detailed it. It looks like you see that little check mark that it's bouncing off. And I even said in my close friends group, if you're a part of it, you'll actually see right here, this is my close friends group, that, the support is right now, and you might want to wait till tomorrow to actually see some positive confirmation, some more that we've already seen. So we've already seen some positive confirmation, but we would like to see a little bit more and for it to get a little bit over the last resistance. Keep in mind, I don't always show my close friend's story on my YouTube channel, but I did want to share with you guys just to see what you can see what I'm posting on there. So you'll see the Redfin post. The next is going to be the DraftKings, and we're looking at the support right here. So here you'll see I detailed, looks like it's almost right at the lowest support in the last 3 months, which was $32. So I would hold off to buying more until you actually see DraftKings at around $32. Love to stock up on a little bit more DraftKings around $32. Probably put like $200 to $300 more into DraftKings right around that price point. All right, so the next one is going to be Fastly, and if you want to get on my close friends list and you want to see all this stuff, like I said, I don't always post it on my YouTube channel, so feel free to reach out to me if you want to see it as instant as it's posted. Did post this about 3 hours ago as well. You'll see right there. So Fastly, you'll see is at $68 a share right now, and what you'll see is Fastly broke its lowest support in 5 months, which was $72. It broke, and which means it could actually go lower from here. So June 23rd, 5 months, it hasn't gone lower than $72, and right now Fastly is at $68, which means it can drop all the way down to about $60 a share or even lower, right where you see the arrow and the support is going. That's where I would set my price target to buy on. So if you pull up Fastly, you'll actually see about right here was last time about 63 a share. And then other than that, it was at 47 just this year too. June 10th, it looks like it was at 47. So I'd like to buy around anywhere around $60 to $50 a share for Fastly. I think it's pretty realistic because as you see, it's headed down and it did break some pretty hard supports that it had. It did break those and it looks like it's heading down even a little bit more. All right, so I posted all these on my close friends story, by the way. If you guys want to join, let me know. DM me, comment on the video if you do want to join. The next one you'll see is going to be Wynn Resorts at $71 a share currently. Wynn Resorts is at a support right now, and it could be trading actually $10 to $15 more in a few months from now. But that's depending on if this Rona does get better because it is a huge hotel and resort company in Las Vegas. So that being said, if people aren't traveling because they're fearful for the whole Rona thing going on, that this company can actually go lower. It can go to like 65 to 60, even $50 a share. It was at the peak Rona. Now, I don't think it'll get that low again. I'd love to buy the stock anywhere from $60 to $65 if you put a price alert there. I think that's an awesome place to buy Wynn, and this is going to be a long-term hold again. So this is a long-term hold one. Fastly, I would say they're more of a swing trade if you can get them at the right price. They're a good long-term company, though, so you can long-term hold them. DraftKings, long-term hold. Redfin, it's going to be a swing trade as well because it looks like it's bouncing right off the support. So that brings us to our next one, which is going to be Intel, $44 a share right now. And Intel is a very interesting one is because it's at the support right now, and I'm 90% sure it's not going to go past $43 a share. Intel is because it has not gone that low in 3 years. So that's pretty important to understand. Even during the huge Rona crash that killed every stock in existence a few months back during March and February, end of February, early March, it still was not as low as it is right now, $44 a share. And if you go all the way back to like 2017 or 2018, it still hasn't been as low as 44. And Intel is a great company for a long-term hold. But I would say that this is going to be a nice swing trade as well because it's going to bounce right off that support and go up 10, 15, 20% too in just a couple months. I can see it. I actually took an option call out on Intel recently for, I think it was January 21st, if I remember correctly, 2021. And I took it out for saying that they would be going up basically 6%. Now, the last one we're going to be talking about is going to be Netflix. And these are all my close friends list. So if you guys want to join, you're missing out on a lot of content. Netflix right now, you'll actually see $470. I think it can easily be going down to. We can see Netflix hit the support of 470, which it hit several times in just the last 3 months. It's hit it about three times. So this can be the fourth time. And definitely have this one on your watch list. Netflix is a great long-term company that I would be more than happy to scoop up at around $470 a share or even lower. So as I'm recording this video, it looks like that Netflix did raise their prices, which you'll see right here. Netflix raises prices, stock leaps about 5%, and they're up to $511. A 5%, $25 gain on the stock price just at a snap of a fingers. So, we probably won't see the support that we were talking about hit for a while. And this one can have a run up. I can see it going all the way to 530. Anywhere between 550 and 530, we can see a run up before it'll actually hit that support that we were just talking about of the $470 too. So guys, I hope that video did keep you a little bit updated, let you know what was going on. We still have a good 3-month gain here on the account. You'll actually see too, it's not just a straight line of gains. You know, just on September 3rd, we were up 32%. And then look at that, you know, I went down, down, down. So to get this 15% in the last 3 months, you see it's not just like it just goes up all the time. I was only up 4% on September 23rd, and I was up, 30% before that too. So if you stick to your plan and have the right strategies and are investing for the long term, and if you see your stock going down a little bit, as long as you hold it and don't sell it and don't panic sell, then you're going to be making money in the long term too. And then just on October 25th, I was up 31% again. And then we saw that little hinder, and I went down 15%. So overall, in the last 3 months, I'm still up 15%, which is really good. If you guys love these videos, hit a thumbs up on it. I come on here every day to keep you guys updated, let you know what's going on in the stock market. Started my account from $0 4 years ago. I have 3 different accounts now. My Webull one has just as much as my Robinhood one. I have a Vanguard one with 12K in it, and I also have a Fidelity account that has about $5,000 in it as well. So I'm about 30, 40 grand in the market total. Comment below, show some love. It only takes 1 second out of your day to hit the thumbs up button, and it really does help out the channel a lot with the algorithm. So please hit that thumbs up button, show some love, share with a friend, and until next time, guys, remember, don't time the market, buy the market. Peace.